Aloha, everyone. Welcome to Java. Thank you again so much for joining me. This is for Tuesday morning, November 14th, 2023. So, as always, we're starting with our favorite risk indicator, the MMRI. We are in extreme territory again above the 300. It did retrace a bit from yesterday because the relative strength of the dollar and the 10-year yield both dropped a bit. So stocks went green. We didn't have a lot of news that kind of coasted along. Stocks did go green as we thought yesterday. Today, we're showing the futures are a bit positive, and the current mix is low volatility, but that could change rapidly. So we are looking at the positive to mixed, but it's waiting for that inflation data, and that will come out prior to the market open. So I expect market open will be extremely volatile. And then they're going to have a couple of Federal Reserve presidents on hold that will speak later, and they can manage the market if there's anything serious. So right now, it's, in my opinion, highly unstable. We're watching the debt market with large fluctuations, and we're waiting on that core price inflation. So that's the number that the Federal Reserve is looking at to see if they will hike or cut rates. So if it's low, the market will price in rate cuts. If it's high, the market will drop and go red because they'll think that the Federal Reserve will continue to hike, and that will hurt the markets. And right now, the reason this is so much more instability than normal is because the algorithms, which trade for all of the big money, the hedge funds and the pensions, are borderline. And if they move into triggering into that buy or sell mode, it will increase the volume of the number of trades tremendously. So as soon as it starts moving a direction, we could see some very rapid things going on here. So we are still in the middle of I call it a selection cycle. We are having a new United States president is up for election next year, and they will try to manage this and keep it stable until then. I don't know if they can. We'll see. We've also got the end of corporate buybacks on December 8th. So, toward the end of the year, they are forced to disclose any large numbers of shares that they purchase or sell. And they're going to have to rebalance their portfolios prior to the end of the year to get to their mandated 40-60 split or whatever it is that they have told their investors that they would have in their portfolios. So, that's kind of some forced buying that could happen here as well. So Monday, as I said, there wasn't too much. Today we are getting core inflation numbers. And then Wednesday, prior to market open, we're getting core producer inflation. And then also more Fed presidents speaking. So I wanted to bring up something that happened to a few of the viewers as well. And I've been hearing more about this. Wells Fargo, it happens to be in particular, but also Bank of America and some of the larger ones getting errors. On this particular one, it says some account information is temporarily unavailable, or there was a problem on their end, please try again later. So either one of these, the point is that you would not be able to withdraw your money. So if this extends for a number of days, I'm hoping that you're prepared and you already have some pulled out, because this could happen at any time. The banks are terribly unstable. So along with this, we've got this story coming out again. The Japanese yen sliding to a multi-decade low. And the problem is the markets are on alert for intervention because they have been known to do some wild moves. They do hold quite a bit of US dollars and debt, and so that could really move the markets as well. We've also got the truth amongst being told by mainstream media that the United States and also other economies are so strong and doing so well. Wall Street workers are paid on bonuses to corporate profits and how strong the companies are at the year end. And they've just been told to expect another year of small bonuses because none of them are doing well. Had a bit of a fake out yesterday. The BlackRock fund filing of XRP, which is with Ripple. They triggered a brief rally in the cryptocurrency because a lot of people thought it was real. So they started buying into it without looking at the reality of it without doing any research at all. And they kind of got wiped out. So this was pump and dump, is what we call it. And whoever created this so that they could sell at a higher price. So watching that. I've got another story along with the exchanges and why I tell everybody to be cautious and it's time to get out. Google, their parent company Alphabet, are dissolving their stake in the trading app Robinhood. So Robinhood is a newer trading platform on the block, kind of geared towards the younger generation, was lacking a lot of the higher end real trading technicals and abilities. And so now Google is moving out of this. They see what's coming. A lot of the newer traders are about to get wiped out. And so that exchange, in my opinion, will likely go with it. We'll see what happens. In the retail jobs and economy side, we've got a popular meat brand closing processing plants. This is Tyson. And they're quoting lack of demand, saying people are no longer eating meat. But the reason behind it is because of inflation and people cannot afford it anymore. So that kind of paints a different color to that picture. We've got TJ Maxx and Marshalls, are retail stores in the United States. They're closing multiple stores. And this talking about the list, but basically retail going down. So with this, we've also got another report of consumer spending, and this is tracked by credit card transactions. But we're also watching the tracking for Affirm. Affirm is a company to do short-term lending, basically, and they will even cover things such as a Starbucks cup of coffee. But between these two, the purchases are still down even on the lending. So on the job side, we're watching the start of a doom loop, is what we call it, because Stellantis was one of the big three auto companies that the United Auto Workers had a strike against. They built a deal. So now they've got to make up for that. They're trying to buy out roughly half of their salaried workers that were not included with the union. So now they're cutting jobs for those that they can. So once people don't have jobs, obviously they can't afford to purchase anything. So that's what starts that loop. We've also got Goldman Sachs forecasting higher returns on commodities. So when money moves out of the stock market or out of another area, or people are worried about the hyperinflation of the dollar and losing value, they'll put it into something that they think they will get either more of a return or will at least hold the value, and that would be commodities. We've also got Exxon Mobil. They're moving into lithium production for electric vehicles in Arkansas. So at least it's local to the US, but they're diversifying a bit and they're also purchasing smaller companies. So ExxonMobil showing a bit of strength here. In the trade side, we've got the BRICS countries uh, importing record amounts of Russian oil. We knew this was going on. They're trading in their native currencies. And the country they're talking about is actually Brazil. So South America, China, doing large trades in oil and with the Middle East. And along with that, we've got Saudi hosting Saudi Africa Summit in Riyadh. So one of the discussions they were having is building infrastructure for moving goods. And by that, I mean like rail transport as well as air. And we know that everything is moved and tied to shipping. So they are looking at creating solutions for this and they're increasing their trade. Now that Africa is moving out from underneath the boot of France, they will be doing free trade with Saudi. So I've got a couple of lava updates. The first one is kind of sad, but we're not going to have this war end anytime soon. And this is just one of the numbers, like shipping tells us on the real economy. They have no intention of stopping this war, and there will be much more bloodshed. And I'm sorry to say this, but it is the truth. They are recruiting heavily for casualty affairs officers. And basically, their job is to notify the next of kin for those that have passed. So if they're recruiting heavily in this, they're looking forward to these jobs being needed. But I didn't want to end on that. So, kind of an off story, but The good news is 1962 Ferrari just auctioned for $51.7 million, most expensive Ferrari ever sold. So somebody's got quite a bit of money to spend on this car. It's absolutely beautiful. Would love to drive this thing. I love cars, love racing. So anyway, I just thought I would bring this up. Hopefully you enjoy cars as well. It's beautiful red color. And if you don't, sorry about that. I still wish you a green trading day and just a wonderful day in general. And until I see you again, my friends, stay free.